How do you turn something super risky and volatile into nearly a risk-free investment? Let's take a look. All right, I had a video the other day about buying iBit and doing a creative option strategy around that underlying asset, which allows you to basically ride the upside to a certain degree of the Bitcoin bounce without much risk. Good news is this is still in the market, and here's another one that I want to show you. Okay, so I bought iBit at $46. It was actually $45.99. Okay. 374 days. I'm going to be carrying this position. Okay. So just over a year, I bought a put strike of 46 and I sold a call strike of 51. Okay. So notice that I bought at the same strike that I'm carrying my insurance. A put is basically insurance. The stock goes down below this price. I don't lose anything. Okay. But I also bought it at that price, which means I don't lose anything. I sell this call because buying insurance costs money. And if you can sell something else to pay for that insurance, well, that's the way to do it. In this example, I have a cost to do this spread of $30, of negative $30, which two negatives equal a positive. So I actually made $30 in order to put on this spread. At 100 shares, you have to do this in 100 share increments. I have a potential gross profit of $500. Okay. I needed to put up $4,600 in order to do it. I'm not borrowing any money this time, but you can add leverage and make this a little juicier. However, you then would be adding more risk. So I'm going to do no risk on this one. Obviously, there's some fees to place the trade. My brokerage charges me about this much per for this one transaction. And there's the cost of a positive $30. Two negatives equal a positive. So my net max profit is $525. My net max risk, 0. That's right. 0. Net rate of return, 11.42% annualized because it is a little bit longer than a year, 11.14. Now, one thing that's important to note is although this looks like financially risk-free, there is one risk that never goes away, and that is opportunity cost. The net max profit isn't a guaranteed profit. Okay, that's something we have to pay attention to. So I made this table that shows, okay, what price do we actually capture the max profit? And because I sold this 51 strike, that would mean the price has to go at 51 or higher. If it goes higher, I'm not riding that. I'm capped at 51. Since the risk-free rate today is about 4 to 4.5%, what price do we need to get iBit at in 374 days in order to capture at least the risk-free rate? Well, that's $47.80. Okay. So I need this thing to go up at least $1.80 in order for me to make up for the risk-free rate opportunity cost. Everything above that, I'm riding better than risk-free return. And I'm taking this all by the way and nearly risk-free other than the opportunity cost. This is just a table showing where iBit would close at and how much profit I capture. The reason I'm showing this is notice that 51 is exactly where I'm capped. From there, I'm not riding any more. iBit could be up 56, it could be up 106. I'm not capturing it. The good news is if iBit goes down to 30, you're also not capturing any of that. So it's a very safe way to be able to capture over 11% return. Well, and if you want to buy Bitcoin anyways, this is a great way to do it. All right, so let's summarize. You have an upside potential of 11% plus. It can be 0. Okay, and that's where I talked about the risks. The real risk here is opportunity cost. If we only go up $1 between now and a year, I should have just invested in the US Treasury rate. If we go up $10, I also didn't capture all that. If we go down $10, phew, right? All right, I hope you guys get some value from this. Please post some questions if you have any. I'd be happy to answer them. Have a great day. Thanks.